Okay, so let's have a look at the last adjustment, adjustment 9. A check for 800 has been received on the 31st of 12th, 2013 in respect of a debt 800 previously written off. No entry was made in the books to record this transaction. So usually if we get money for a debt that's previously written off, there's 3 accounts that you need to adjust. So number 1, we're going to create a bad debt recovered for the amount of the debt. That's going to go into your profit and loss account as add income. Then we're going to adjust our bank because we received this check, and you're going to adjust the bank with the amount of money you received. You just need to be careful which side our bank is on. If the bank's on a credit side, it's an overdraft, so you're going to take it away. So our overdraft is going to decrease because the money's going into our bank account. But if your bank's on the debit side, you're going to increase it because it's money that we have. And then the last one, you're going to adjust your debtors with the difference between the two. So the difference between the total debt and the difference between the check is how much you're going to adjust your debtors by. So in this question, we can see that our debt is 800 and our check is 800. So we're not going to adjust it by anything. But in some questions, there will be a difference between the two. Okay, so let's have a look at the question on the adjustments. Remember, step 1, create a bad debt recovered account with the total of the debt that's given in the question. That's going to be added on to your operating income because it's extra money that we didn't think we received, but we have it. Then you're going to adjust the bank figure. So that's the second account. You need to adjust your bank with the check received. So if the bank is on the credit side of the trial balance, it is a bank overdraft. You owe this money. So this means that you will take the check figure away from the bank figure because you owe less. But if the bank figure is on the debit side of the trial balance, we have the money, so you'll add it on. And then usually you have a step number 3 for the debtors. So this is the difference between the total debt and the check. But in this question, we know that the total debt was 800, the check is 800, so there won't be any figure there. But usually when we get this debt previously written off, there will be 3 parts to this question, so just be wary of that. So it's going to be 800, we're just going to create it. So that 800 then is going to go into your profit and loss, and it's going to go into your add operating income. So this is extra money that we're going to receive. Then you're going to adjust your bank. So you need to find out what is in our bank. So that's coming straight from the trial balance itself. So our bank figure, here's our bank figure. So our bank figure is on the credit side. So that's a bank overdraft of 16,400. So after lodging a check of 800, so that's going to mean that our bank overdraft is going to go down by 800. And because that is a bank overdraft, it's a liability. So it's going to go into your balance sheet, and it's going to go into your balance sheet as a current liability or creditors due within 1 year. So anytime you get bad debt previously written off, 3 accounts, bad debt recovery is just going to create it with the full debt. So 800. You're going to adjust your bank figure with the check that we receive. So if it's on the credit side, it's an overdraft, so we'll reduce it. If it's on the debit side, it's money we have, so we'll increase it. And then sometimes you have to adjust your debtors, but in this figure we don't have to because there's no debt owed. So usually the difference between the total debt and the check is going to be how much you're going to increase your debtors by, because that's how much they owe. And that's the last adjustment for McMahon for 2014, and then you can start the profit and loss and start the balance sheet.